Welcome back, everybody. We're going to be doing this weekly more to a bigger audience. We got Jim Black. What's up, Jim?
Good morning, my friend. Good to see you.
Nice to
I
see you
appreciate
too.
you. Your name, by the way, is Ansel Amada on the Zoom, by the way.
I know,
Anson.
buddy. You know what happened is Anson is my son, and
Oh, cool.
he started summer school, so he wants to get it's his first year in high school this coming year later. So he's trying to get ahead and he's doing geometry through the summer, but he stole my Zoom and he changed everything. And I'm like, dude, what the
I love
hell,
it.
bro?
I love it.
So,
That's hilarious.
so now I'm gonna change it right back.
Very
In the
cool.
meantime, the war is supposedly over, right? What are some things that we're seeing change quickly in our world? Mortgage, have we seen any quick changes in the real estate market? Any rumors? Anything you're hearing? What are you seeing?
Yeah, absolutely. There are four topics. There are four themes that real estate professionals, mortgage people, and homeowners should know. Normally, what we'll see happen is oil prices are starting to fall. They were north of $100 a barrel. Now they're down to like 80, 85, which is a good sign.
Mm-hmm.
And oil, as we know, is the product that everything is based off of for consumption pretty much in the world, from your iPhone to your hat to driving a car, you name it, resources, energy, all that stuff. So
Okay.
as oil prices fall, that will mean that there's less inflationary pressures on the cost of goods, right? It's costing
I'm
more
gonna
to get gas. It's costing
I'm
more
gonna
to
share
produce.
I'm gonna share our charts, the ones that we've been sharing here and there. So
Perfect.
crude oil, right? All of a sudden, it's been down the last few days. Here it is. Boom, right? There
Yep.
you go.
And that's a good
Uh,
sign. What that does is eases off pressures from people spending more money on durable and non durable goods. And so, what we're seeing now, we'll see inflationary pressures probably start easing a little bit because they've been very high, as we know from reports like recently. And
yeah.
what that will allow the Fed to do is have more flexibility in right sizing the ship, so to speak. So, when pressures are relaxed, it normally means that they won't have to raise rates as frequently or as suggested because the inflation will be easing without their involvement. When inflation is very high, the Fed raises the rates so that people spend less money to try to get inflation lower. So as inflation goes lower, so will the need for the Fed to increase the interest rates. That's a very good thing.
Got it.
And then what that leads to with mortgages is that leads to an ease of mortgages. So we've also seen there be a decrease in interest rates over the last couple of days. So we're getting back to the 6.5 range on rates versus the 7% range on rates, which is helpful and eases people's pressures to then make long-term decisions. People in uncertainty always tend to ease off when they make decisions. Let's just hold and see what happens. So as rates go lower, it gives people more confidence to feel like they can make a better long-term decision and maybe get off the fence. So again, you're pulling up the interest rate for the 30-year fixed right now, and we've seen that maybe in the last couple of weeks here go down from about 7%, and you have 6.54. So I'm pretty close on that in terms of what's happening, which is great to know that the data set is correct. Um, and then when rates go lower, it should make sure both buyers and sellers feel more confident that they can make a move. They can get to the next stage in life. If that's selling and getting a replacement property, if it's buying versus renting, because the cost of borrowing is going lower, which makes it more appealing to then buy a property versus rent. Those are all very good factors that we're seeing happen to allow us
Mm.
I would say, more velocity in the markets. So a speed up of transactions, maybe more inventory, maybe more buyers. Those are all good signs, especially this time of year where in most countries there isn't snow, there isn't cyclical elements. It's normally a great time to do something right now before schools start and allow people to get settled in before late August, early September when life comes back to reality for a lot of homeowners that have kids or kids in college or vacation time's over, whatnot.
So do you think here, let me go to days on market. This is days on market. It's gone down. We don't have June yet, right? But this is during the war. Now war's over. Now I think, you tell me what you think. We're looking into July and August. I feel like with the rates dipping, days on market will go down nationally, right? Because every area is different nationally. But what happens is we now have a late summer, I think, slight boom to real estate. More homes going under contract, so pending, right? And those are all leading indicators as to where we're going to head into. I think if everything else lines up, we have a pretty good summer for real
I think
estate.
it'll be great summer. I think it'll be some activity will come up. Remember when these big events happen, like wars or a big economic event or something serious, it stalls a lot of activity. So there's a pressure buildup of momentum when these things are perceived to be over that gives people the jump start again to get into the next move that they're making. So I think this pent up stall, so to speak, is going to be a really good thing for the last part of the year. And I'm seeing things across the country start picking up. We have a development in Wisconsin. Our first open house weekend last weekend sold 4 of 4 homes that were available. So we're seeing
Dang.
activity in certain pockets of the market pick up.
What price point is that?
It was mid market, so it'd be probably a higher end first time home buyer market or someone maybe relocating. That would be a conventional type of loan size for the
Okay.
average median household income in the United States.
Okay.
So that's where I'm seeing activity still. And
What's your
again,
average? Since you have that in Wisconsin, it's new
yes,
construction. Uh, what is the average price point in the area, and then what are you guys selling those for?
absolutely. The average price point is about 545 purchase price. We're selling them for
Mm,
about 600,000 to 700,000. And
okay.
again, new construction is more appealing a lot of times to people because something's
Yep.
brand new, right? It's like buying a
Oh,
new
dude,
car,
100%.
something like that. It's turnkey. I don't have to do anything. I get to pick out my appliances. I get to pick out my finishes, my upgrades. So we're seeing a lot of activity, and that's in a partnership with a very large builder. One of the top 2 builders in the country is helping us with that. So we're seeing some people make moves, and again, where the inventory is tight, people are still having to make decisions, right? Because if it's tight on home ownership, it's probably tight on the rental market also, right? Because if people aren't able to buy, they're renting. So there are markets that
Yeah,
have an
true.
oversupply of housing or oversupply of rentals, but you'll see those things kind of work in tangent, in my opinion.
It's true, man. I like that. I'm gonna next week when we do this, I'm gonna take a look at the national housing outlook, and I want to take a look at some states as well. So I'll take a look at Wisconsin. I hadn't seen Wisconsin specifically. What area are you in? What are you building in?
We are on the southern part of Wisconsin, right on the border of Illinois. And what that is in a county called Kenosha County. And what happens in that part of the country, everyone wants to have businesses in Wisconsin because it's business friendly versus Illinois. But a
Mm,
lot of people are commuting to Chicago for work or up to Milwaukee in that area. So it's right in between those, about 30 minutes away from either direction. So it's a
that's
really good
cool.
place that has a lot of growth, and it's I think it's one of the top 15 markets right now in the country, which is exciting because when you build homes, you're not starting yesterday; you're starting years ago. So fortunately, we did a lot of good homework
True.
and market studies to make sure we understood the need for housing for the 10-year trajectory of that market, not just the temporary needs.
I love that, man. Good update. Now,
I'll see you
let's see
next
how
week
this goes.
on. Yeah, I'll see you next week. I'll make sure I wear my hat too, and I'll change my name to your son's name. I'm gonna be Anson next week. Anson
Well,
Black. Sounds good.
I changed my name. It's Tristan
I'm
is
changing
Steve.
mine too. All right. Have another coffee or whatever you're drinking, and thanks for your time. Have a good week, everybody.
Thanks, everybody.